And it's resistance. It's resistance for no other reason than that. The bulk of traders are thinking there's no way the pound should go over this price. And once the market spiked up here, you can see in January it did get a little bit higher, but what happened? The market immediately came back down. So now we have a resistance zone. And what this means, resistance and resistance zone, simply put, means that traders are thinking the price is too high. That's all that means. So if the market breaks through to the upside, boom, pops up, and then starts trading down, well, first of all, if there were enough traders to overwhelm the guys back there, then you've got to think, well, maybe some of those guys are going to flip, and maybe they're going to start thinking, well, you know what, maybe the pound should be higher. And maybe those guys are going to start to buy. You notice I'm saying maybe. We don't know. We've got to watch. We've got to look. Like I said, there's nothing set in stone here, but we're looking for patterns. And maybe if price holds above these two levels for long enough, more traders are going to say, well, I guess the pound is strong up here. And that's when you start to see sentiment change. And that's when you start to see people thinking, wow, the market really should be higher. It happens in every market. It happened in the huge run-up in equities in the U.S. It happened in the huge run-up in equities in Japan. That same cycle. Traders thinking, oh man, there's no way the Dow is going to get over 5,000. Man, that's just way too high. So they sell it off to 4,300. And then for whatever reason, the market breaks through 5,000. And it stays up there for a couple of weeks. And pretty soon traders, they get used to the idea, thinking, hey, you know what, maybe 5,000 is too low. Maybe the Dow should be higher. And then news starts coming out. Earnings start coming out. People start looking at the economy. The economy is improving. Okay? The same thing can happen over here. So that's why we look at this area as support. Okay? But maybe traders are thinking, wow, maybe the dollar really is weak. But then you have to back up the data. If the data starts coming out and it's weaker and weaker, and it just looks like, man, the dollar is really weak, then you know what? Traders will start buying over here, and you'll see that the support area will hold. Okay, that's just the natural cycle of things. So then let's talk about this whole concept. Then let me freeze the frame. And what I've done here is, the line here is pointing to the low. Okay, so I've got the low. That low is right here. So here's the low of the prior week. This week here is in all of this trading right there. Okay, so you can see that during this week there was a lot of up and down activity, right? The market pops up, it comes down, it pops back up again, it comes down. So actually during the week the market tested this low a couple of times, didn't it? I mean, look at this. We've got 1, 2, 3 times the market tested the low. Okay? Pardon me, 2 times. This first time was during the prior week. So 2 times the market tested the low. So here was the original low. Here's a test. Here's a test.